Okay, let's talk about some results coming out of JSE linked companies anyway, not particularly JSE based. This is Redefine International. And on the line now from London is Mike Waters, the CEO of Redefine International. Mike, thanks very much for joining us this lunchtime. I want to read you something to sort of set the tone for the interview, because it says here, as previously announced, the company has highlighted its intention to seek an inward listing on the JSE Limited to enable the group to simplify its corporate structure. I mean, that's the key point to me, because it is very complicated. What are you hoping to achieve with the simplification?
Yes, thank you, and thank you for having me on. At the moment, we have a dual listing, dual company structure, where the South African entity, JSE listed Redefine Properties International, owns about 65% of the LSE Redefine International PLC. So you've got two entry points into one set of assets, and because the South African company owns about 65% of the London listed company, your liquidity and your trading is affected. So what we're trying to achieve is to remove the intermediate company and then have one company dual listed, which will enable shareholders to either invest via the JSE or the LSE, but into the same entity. And that will help us to improve liquidity and the free float, and will enable us to convert to a UK REIT, which is what we think we should be doing.
Okay, so simplification coming to the fore. Let's take a look at your operations right now and the kind of exposure you have to the European property market and the South African property market specifically.
Well, we're invested in the UK, Europe, and Australia. We don't have exposure to the South African market.
Let's take a look at where you see things headed then from here on out, because we know that there was quite a tussle, for the growth for Fountainhead with Growth Point, and that signal that perhaps you're looking for an entry point into this market specifically.
Yeah, I think that's our parent company, Redefine Properties, which has had, as you say, the tussle with Growth Point. Redefine owns approximately 35% of Redefine International, and I'm the CEO of Redefine International, which only has international properties. We're not invested in South Africa.
Mike, you've got 95.9%, I think, occupancy at the moment. You want to keep that stable. But when you look at the diversification, your geographical diversification of your company, which one do you think has got the greatest potential? You can say Australia is linked to commodities and linked to Chinese growth. You can say Europe, essentially, at the macroeconomic level, is a basket case. But if you had to look at that portfolio, which is the one that gives you the most confidence for the future?
Well, I think the beauty of our diversified model is we can recycle capital between investment silos. And we announced approximately 2 weeks ago that we'd sold part of our stake in the Australian subsidiary that we have. And that was on the back of a very strong increase in the Australian dollar and a big run-up in the share price of the Cromwell company. So what we look to do certainly is where we see a growth has taken place, and we can reinvest proceeds of selling down certain parts of the business into underperforming bits, we will do that. So the cash that we raised from that sale of about £50 million, we would be looking to reinvest into what we believe are undervalued assets within Europe and the UK right now. So it's all about recycling at the right point to take profits from one element of your company and put it into underperforming elements. And right now, although growth is still very flat in the UK and Europe, we think it's probably the right time to start putting a bit more capital to play in those areas, because we're slowly starting to see those economies coming out of their slumber.